I'm joined by Gary Dugan, Chief Investment Officer for Asia and the Middle East at Coutts. I know, Gary, talking about this sell-off, it surprised many people. Why is it happening now?
I think it's a kind of confluence of events. You know, we've seen problems in places as far away as Ukraine and Argentina in just the last few weeks, but it's compounded by a general softness to global growth at the moment. We've seen a little bit of disappointment out of the US, but perhaps more profoundly last week with the data that came out of China. What we're seeing in terms of confidence came in significantly below expectations.
Okay, but the problem is people talk about the QE tapering. It's not like we didn't know it is happening. The Chinese flash PMI number, there's a lot of seasonal noise in it. Is there a sense that the market is really out just looking for negative news because the sell-off has to happen?
Yeah, I totally agree with you, because if we go back to that China data, the real numbers of activity in the fourth quarter are all pretty good. Most parts of the economy are running still at a double-digit rate of change year on year. There is still liquidity around. I know we keep talking about US tapering, but it looks like a further expansion of the Bank of Japan's balance sheet to almost replace the Fed. So it's not as if the world's going to run out of money. It's just, I think, a lot of people fearful at the moment about some of these kind of one-off events around the world.
Okay, so how long is this pullback going to go, and how deep can it get?
I think if we look back to the middle of last year, it probably gives some sense of scale. So we've probably fallen in both bond markets and equity markets about 2/3 of what we saw last time round. So there may be further selling pressure, but I would see that as a buying opportunity as much as there was a buying opportunity in June to August last year.
Okay, buying opportunity all across the board, or there is a distinction to be made among the basket of Asian countries' currencies?
I think you've got to be careful, because clearly some central banks may be forced into supporting their currencies by raising interest rates, and that's not what you want as an investor. But, you know, we even think, for example, in the Chinese high-yield debt market now, that you're getting up to the kind of yields which will prove attractive longer term, irrespective of some of the fears that people have about liquidity in the Chinese financial market at the moment.
Okay, but what are the markets that you would advise investors to just stay clear of?
I think you have to be very careful in the places like Russia, South Africa, and within this region you've got to still be somewhat fearful of what's been happening in Indonesia. Central bank probably there more on the cusp of having to protect its currency through rate increases, which would do some damage to the local economy.
But India should be okay, because it has done a lot. The argument is at least that India has done a lot.
It has. I mean, if you look at countries running out of money, Turkey's running out of money, but India isn't going to. It built up a kind of a store of rupees in order to protect its currency should the kind of events of the last few weeks happen again. So I think I'm more kind of feeling comfortable with India.
Okay, great. Thank you so much,
Thank you.
Gary. That was Gary Dugan of Coutts.